Ever wondered how regular people build real wealth through the stock market without being a Wall Street expert? Hi, I'm Emma, and welcome to Wealth Mindset, the place where everyday people learn how to grow their money and master their financial future. If you're ready to take control of your finances and unlock long-term wealth, make sure to subscribe to Wealth Mindset, where we believe in the power of a wealthy mindset. Hit that bell icon so you never miss a money smart moment. Grab a notebook, hit that like button, and let's dive into the world of stock market investing made simple. What exactly is the stock market? It's more than just numbers and charts, it's a living, breathing ecosystem of opportunity. Every day, millions of people trade pieces of companies with hopes of growth and reward. At its core, it's where ownership meets ambition. It's a marketplace where investors buy and sell ownership in companies. Each stock represents a slice of real businesses, from your favorite coffee chain to cutting-edge tech firms. These trades happen all day, driven by belief, data, and dreams. It's a bustling, vibrant place full of choices. Think of stocks as tiny pieces of a company. When you own a share, you're literally a part owner of that business. That means you benefit when the company succeeds and share in the risk when it doesn't. It's real ownership, even if it's just a small piece. The stock market isn't just for the wealthy, it's open to anyone with access and ambition. It's legal, regulated, and built to protect investors like you and me. You don't need a fortune to start, you just need a plan and a bit of courage. Everyone deserves a chance to build wealth. There are different types of markets and stocks out there. From high-energy Nasdaq tech stocks to classic blue-chip names in the NYSE, the landscape is rich with options. Some stocks grow fast, some pay dividends, and each has its place. The U.S. stock market plays a huge role in retirement plans, personal wealth, and the economy itself. Before you invest, define your purpose clearly. What are you trying to achieve with your money? Purpose creates direction and keeps you focused even when the market gets rough. Without purpose, you're sailing without a map. Ask yourself why you're investing in the first place. Are you saving for retirement, a future home, or maybe looking to earn passive income over time? Each reason gives your investment a unique shape. Without clarity, it's like shooting arrows in the dark. Your time horizon matters more than you think. Are you investing for the next 3 years or the next 30? Short-term goals need safety. Long-term ones can afford more risk. Knowing your timeline helps shape the tools you'll use. Investing isn't one size fits all. You need to know how much risk you can emotionally and financially handle. Are you okay with some bumps in the road, or do dips stress you out? Your risk tolerance determines how adventurous your journey can be. Being honest with yourself here is powerful. Before you invest a single dollar, know your full financial picture. Track your income, understand your expenses, and have an emergency fund in place. Think of it like building your armor before going into battle. Solid foundations mean fewer surprises down the line. Crafting a beginner-friendly investment plan doesn't have to be complicated. Start with clarity and build a strategy you can stick with. Think of it as your financial GPS. It helps you stay on course even in rough market weather. You don't need to be an expert to start, just someone with direction. Diversification is your shield in the world of investing. Putting all your money into one stock is like crossing a rope bridge with no safety net. Spread your investments across different sectors to reduce risk. It won't eliminate loss, but it gives you better balance. Dollar cost averaging is a simple but powerful habit. Instead of investing a lump sum all at once, you invest the same amount regularly, no matter the market. Over time, this helps you buy at different prices and smooths out the highs and lows. It's like planting seeds every week instead of trying to grow one tree overnight. Index funds is more hands-off and steady. Neither is better, it depends on your time, interest, and risk appetite. Compounding is where the real magic happens in investing. The earlier you start, the more time your money has to grow exponentially. It's like building a snowball, small at first, but it grows as you roll it forward. Simplicity and consistency turn into powerful results over time. Where do you actually put your money to start investing? It's not enough to just pick a stock, you need the right account to hold it. This is like choosing your base camp before climbing a financial mountain. The account you pick can impact how your money grows over time. You'll want to understand the difference between taxable accounts and retirement accounts. Taxable accounts are flexible but less tax efficient. Retirement accounts like a Roth IRA or 401k grow your money with tax advantages, but have rules on when you can access it. Knowing the difference helps you build a smarter long-term plan. Taxes can affect your investment returns more than you think. In the US, you pay taxes on capital gains and dividends depending on how long you've held the investment. Holding long-term often means lower taxes, so patience can literally pay off. Understanding this is like knowing where the traps are in a treasure hunt. If you're under 18 or investing for your children, look into custodial accounts. These are special accounts managed by an adult until the child reaches legal age. It's a smart way to start early and build wealth across generations. Even young investors deserve a strong head start. Don't forget to choose a platform that makes investing easy and accessible. Look for ones that support US stocks, offer educational tools, and are beginner-friendly. Technology should work for you, not against you. And always prioritize platforms that offer tax-advantaged accounts for long-term success. What stocks should you actually choose and why? Not all stocks are the same, and knowing the difference can change your whole strategy. Picking the right kind of stock depends on your goals and risk tolerance. Let's break it down step by step. First, learn the difference between common and preferred stocks. Common stocks usually give you voting rights and potential growth, but can be more volatile. Preferred stocks don't usually have voting rights, but offer more stable dividends. It's like choosing between being the pilot or riding in first class. Get familiar with stock categories like growth, value, dividend-paying, cyclical, and defensive. Each plays a different role in your financial journey. Some grow fast, some pay you while you wait, and some stay strong when the economy struggles. Having a mix helps protect your investments. Think of them as different teammates in your financial adventure. Stock prices don't just move randomly, they're influenced by earnings, news, the economy, and even global events. When a company performs well or surprises the market, its stock often rises. But negative headlines or weak earnings can send it falling. Learning to read the signals is like decoding the weather before setting sail. Start with basic analysis before you invest. Look at company earnings, how much debt they have, what their industry is doing, and who's leading them. Strong fundamentals are like building your castle on rock, not sand. Don't get distracted by hype, build your portfolio on facts. Investing is exciting, but staying safe while you learn is just as important. You're stepping into new territory, and it's easy to make avoidable mistakes. Think of this part as your training ground before you enter battle. A little preparation now saves you a lot of regret later. Never invest money you can't afford to lose. Essentials like food, rent, and emergency savings must come first. Investing comes after. If your financial foundation isn't solid, even small risks can feel overwhelming. Protect your peace before chasing profit. Emotional investing is one of the fastest ways to lose money. Fear makes you sell too soon. Greed makes you hold too long. When your emotions take over, logic goes out the window. Stay calm, stick to your plan, and tune out the noise. Don't try to time the market, it's nearly impossible to do consistently. Focus instead on staying invested and letting time work its magic. The longer you stay in the game, the more chances you give your money to grow. Time in the market beats timing the market every time. Start small, grow your confidence, and learn from others. Don't wait to be perfect, just begin with what you know and build as you go. Study other people's mistakes so you don't repeat them. Your journey is personal, but you're never alone. Staying on top of your portfolio doesn't mean obsessing over it. You don't need to watch every price move. Instead, focus on consistent check-ins. Knowing where you stand helps you stay confident and in control. A good investor is aware, not anxious. Reviewing your investments monthly or quarterly gives you a clear picture without the stress. Daily checking can cause anxiety and lead to poor decisions. Markets have natural ups and downs. You're in this for the long game. Let time do its magic. Rebalancing keeps your strategy on track as markets shift. Sometimes one sector grows faster than the others, which can throw your mix out of balance. Think of it as adjusting your sail when the wind changes. It's a small tweak that keeps you headed toward your destination. Never stop learning. The more you understand how the economy, sectors, and businesses evolve, the smarter your decisions will become. Think of investing as a lifelong journey, not a finish line. The market rewards curiosity and adaptability. It's normal for markets to go through ups and downs. Don't panic during dips. Stay focused on your long-term vision and avoid reacting emotionally. When others are fearful, being steady sets you apart. Patience is your greatest investing superpower. So there you have it, a step-by-step roadmap to getting started in stock market investing as a beginner in the US, whether you're 18 or 58. The most important thing is just to start. Every journey begins with one small step, and now you've taken it. Keep walking, your future self will thank you. If this video helped you, don't forget to like, subscribe, and share it with someone who's ready to grow their wealth. One click might be all it takes to change someone's financial life. You have the power to uplift others by spreading what you've learned. Let's build a smarter world together. Got questions, fears, or experiences about your first investment? I want to hear from you. Drop them in the comments below and let's grow together as a community. We all start somewhere, and your voice might help someone else take that next step. Let's turn this channel into a hub of shared wisdom. This is Emma from Wealth Mindset, reminding you of one thing every successful investor knows: the power of a wealthy mindset. Stay curious, stay consistent, and stay invested. I'll see you in the next one.